Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition. Daily market commentary. Brand new week, August the 10th. Hope everybody had a great weekend, was able to spend some time with the family, relax before kicking it with the markets. Well, we've already started looking at the markets as we had our live trade room last night. So some of the lines you're going to see on here are from last night's live trade room. Now, one of the things that I talk a lot about on Sunday nights is that I don't do a lot of set it and forget it style trades. And the reason being is that I'm not in front of the market. I really believe that it's much better to do alert style trading than set it and forget it style trading. And I know that a lot of people say, well, I can't be in front of my computer all day. Well, that's the brilliance of having a platform that will allow you to execute on your mobile devices. If I can get an alert, such as a text message that tells me prices coming into my areas, my lines will still be there even on my mobile device, and then I can look at the arrival into the level. I can't do that in an overnight session, so I typically don't do a lot of set it and forget it overnight. And today we'll see why that might be the case. So if you're new to the channel, make sure you do me a favor, hit the subscribe button. If you've been here before, leave a comment down below. I'd love to hear from you as far as, do you use set it and forget it style, or are you more of an alert style trader? All right, let's go ahead and dive in. So the ES this morning, we are up 5 points. And when we were looking at this last night, we were looking at this as an upside breakout potential, but with the caveat that I would need to have basing inside of this level. We did not get said basing. And so price popped up through. Now, some people may have gotten long on this anyway, as it rallied from 48 up to 55, but then it came right back down. Well, what did it come back down to? Well, it came back down to this little sideways price action movement here. And this sideways price action became the zone of demand that allowed this big move right back up. So overall, the markets are still bullish. But one of the things that we pointed out yesterday was that this is, we're sitting just below the new all-time high of 33.98. I think that the better probabilities are that we continue to head higher. However, we are seeing definitely a little bit of momentum slowing. And there's a little bit of divergence that's showing in these markets when it comes to looking at the momentum of our positions. We can see that prices are still rallying higher, while my momentum indicator down here is definitely telling me, right? Prices are still rallying higher, but my momentum indicator here is definitely telling me, hey, listen, bucko, slow down on your bullish enthusiasm, because we're slowing down. And the way to think about this momentum indicator, it's just MACD. For those of you that use MACD, a lot of people use MACD for the crossovers, and they trade the crossovers in the MACD. And when the green line crosses over the purple line, and then when it breaks below a moving average, and that's all great. But I don't really use it for that at all. I really only use it to see, when are we slowing down our move up. Because if the move is still going up, but we're slowing down, the analogy that I use is to think of that like a ball. Imagine a ball that you throw up into the air. And you throw a ball up into the air. That ball is continuing to rise, but it's losing its speed as it reaches its apex, right? Every ball that's rising loses some velocity as it reaches its apex, before then turning around and going back the other way. Now, unlike the ball in our story, a ball cannot regain its energy, as it reaches the top. The market can, right? It can start going sideways and gather in a bunch of new buyers and then continue to go higher. So a slowing of momentum is not a guarantee of a pricing rollover. It does, however, give us an indication that we may see price slow down going forward. Now, I think that there's a good chance that since we got the breakout, that we have a better probability of price continuing to rally up. And we actually have a pretty decent little reversal candlestick here on the hourly chart. So if you wanted to get long today, when we get above, one of these candlesticks with your stop down below here, I think that's all right, allowing that thing to continue to run. Now, I will say this. If this is an important pivot, for a couple of reasons. Reason number one is that it was formed at a pretty decent time of the day, right? This is a pretty decent, right after an hour after London Open. It is a pivot low, but more importantly is that on the 4 hour, it's the low of a reversal candlestick. On the 4-hour, it's the low of a reversal candlestick, and that is a spinning top or high wave candle, excuse me, with long wicks on either side of a very small body after a move up. And so if indeed we do break below this hourly level, then I think that we have a better chance of continuing to drop further. Now, if we drop further, we have some demand down here, which has been shifted to a confirmation entry. And it's a confirmation entry because we came close to it on Friday without getting filled with this little tweezer bottom. And then price moved up and moved away from there. So ultimately for today, what my thoughts are is that I think the probabilities are that we continue to trade higher. The market hasn't changed its direction. And ultimately, the market tells us that until I change my direction, assume I'm going to continue to rally. Now, if you didn't take the breakout down here, which you shouldn't have because you didn't get quality basing, we can still look for quality basing up above here, above this 33.55, and then you can get long on a breakout above that area. Now that would be getting long above the Globex high, but there's no real supply there for it to be a trap. If we come below this region here, then I would start to say, all right, be aware that we could continue to fall from there, and then I would look for a potential breakdown. All right. Now, the Nasdaq is not showing me the same amount of strength that the S&P is. The Nasdaq's actually a bit weaker, which definitely adds to my weakness thoughts inside of the S&P. You know, you thought the Nasdaq had some, or you thought the S&P had some slowing of momentum. Look at the slowing of momentum in the Nasdaq. It's much more prevalent, right? Much bigger slowing of momentum that's very obvious to see in the Nasdaq as opposed to the S&P. Oops, remove all my studies. So with that momentum slow definitely occurring, you know, in the overnight, price came really, really close. Yesterday, Friday, price came really, really close to our demand area. In the overnight, we opened the hours. We started the market here, and then immediately sold off, and then kind of traded up throughout the night, but definitely not overly bullish. So we do have a 15-minute level above us, which is this area right here. Now, we chose this level because it's also a turning point of these two areas over here to the left. But it's a confirmation entry because technically our uptrend isn't over. Okay? So right now, I'm just still between my areas of both supply and demand, but both are confirmation entries. I wouldn't be surprised if we based right here at this 1102 and then got a drop down. In the Russell, we had set up this Russell level last night as far as where our supply was above us. So if I were to go back, let's see, back a full year here. And in the Russell, this area here, though it's very hard to see, is a very small wick over wick on an hourly chart, which shows up much cleaner probably on the 15-minute. And we hit that last night and moved away from it. Now, we did not trade halfway into the level. Remember, because we're in an uptrend, this has to be a confirmation entry. And we did not trade halfway into the level. Well, notice we hit it and we've gotten 1, 2, 3, 4, 5. We're just about 6 candles into it anyway. That's what oftentimes winds up setting up for a potential upside breakout. And it's nice that we've already hit that supply level because I would believe that the next move would be for price to trade above there if we get the quality basing. Once again, quality basing is required. If you don't get the quality basing, you need to wait for the retest of that area. 15-minute wick over wick demand is down here at 1560 by 1558. Nice small little level for a potential reversal. Moving over to commodities. On crude oil last night, we talked about the fact that crude oil on Friday was kind of all over the place with this, you know, on the inventory announcements, this big move up and then kind of come back down, one right after the other. And now I've got an area of supply above and an area of demand down below. The demand down below there, 4064 by 4053, is found on a 15-minute chart. And it's this little wick over wick area right here. Now, we chose this one as opposed to this one because of some of these turning points over here to the left. This one down here is also a pretty good level, which is why our stop would go down below this 4036 area. So it's a fairly wide zone. You've got to be comfortable with that amount of risk in this position. Looking at the supply above us, we've got another 15-minute level in here. Other than that, there's no real clean levels at current price. Gold. So looking at gold, we've got kind of with gold being at an all-time high, we've got a little bit of a standing breakout above the all-time high, provided we get quality basing. We did say that there's an hourly level right here, but the downside of this hourly level is that we're kind of basing right at the 2-to-1 marker, right? We're basing right at the 2-to-1 reward to risk marker from this hourly level. So if price comes back down into here straight away, we might have a good reversal. But if we base in front of it, then that's kiss of death. You might be better off looking at a lower area of demand. The way prices are consolidating in here is typically going to be a breakout. We just don't trade the triangle breakout. We need price to follow our breakout rules of 3 touches. But it's definitely giving you a little bit of what I would consider, in looking at this, a bit of a bearish pennant pattern. Right? That's definitely a bear pennant. And so if you trade that style, you can trade the breakout if we break out of this pennant. I do not. I want to wait and see that price, actually gives me the right type of breakout, which would be 3 touches at a particular level, and then basing right in front of the zone, which it's not there as of yet to give me anything of any true quality. Looking at our bonds and currency markets, looking at the ZN, which is our 10-year note. This is an example of not having set it and forget it style in the overnight, because if you have a set it and forget it style in the overnight, what you do is you miss out on the fact that we didn't really get quality basing. Price came down into the level, popped through, and then rallied back up, right? Rallied back up without really giving us much of an entrance possibility. Now, I think that level's still an okay zone if we get the basing. We just didn't get any of the basing required for a potential breakdown out of this area. Now, overall, our big picture trend is still very much up. And so, what I was looking at was the fact that this looked a little bit like a head and shoulders pattern. And that head and shoulders pattern, draw that line back in, was right here, right? Shoulder, head, shoulder, for a potential breakdown from there. And a head and shoulders pattern, we would anticipate that if we do get the breakdown, that our measured move would be right here, which puts us right to this area of demand down below. So it's not quite there yet. I would still need quality basing at this blue line as an opportunity to enter that position. But it's just it's still out there as a potential. In the Aussie, so last night in the Aussie, we had looked at this 15-minute little level of supply right here, which is the wick over wick just below the pivot low. And the market came so close to getting into that level and then moved away from it just to get us annoyed. So we've switched that to a confirmation entry because of the closeness to that zone not getting in. Now we are sitting above what could be a potential breakdown area here with price moving to this area of demand. You're going to see this a lot in the currencies, as the currencies are all looking in a very similar fashion. The euro, another one, very similar fashion. We had looked at, potentially if you wanted to take a little bit of a breakout to the upside last night on here, could it give you a run up to this area? Well, it was unable to hold that as it sold off fairly strong. And so now we've got a little demand area down here. This was actually found by one of our members last night in class who likes this zone. I think that's a pretty good zone. My problem with it at the moment is that this would be my stop would have to go just below that pivot. So this is my zone. There's a 1-to-1 reward to risk. This distance here would be a 2-to-1 reward to risk. So if we get any basing at all in here, that's going to make that zone invalidated. Canadian dollar. So Canadian dollar looks a lot like the euro, as we're sitting just above a potential breakdown point. The reason that I chose this as a breakdown point is because I feel like this area down here of demand, which is the equivalent of the one that we've got in the euro, we're basing in front of the level, and so if we get quality basing here, you'd have a decent opportunity for a breakdown. Inside the Great British Pound, this one we came close to in the overnights with no true setup or no true fill. And so I need to switch this to a confirmation based upon our rules in order to make sure that we don't jump in too quickly. But then price can still make it lower from here. We're still kind of sideways, so I don't want to add anything to my chart. And then the Japanese yen, for those of you that have been following us for a while now, we are in between supply and demand. We have not created any quality levels. I will say that we did put a little bit of potential right in here. So if we get some basing in here, you may get a bit of a breakdown from that zone. I think that's probably the best one we've had in a while inside of the yen. So remember that on Wednesday, today's Monday, on Wednesday, we will do our live daily market commentary. So please join us Wednesday live at 7 o'clock Central. Until then, everybody, I hope you guys have an amazing trading day. Appreciate you joining us. I'll talk to you soon. See ya.